Hello traders, welcome to our next video of Prime Codex trading class. In today's video, let me explain one of the forex trading strategies that is commonly used by traders. Yep, the trend following strategies. But first, let me introduce myself. My name is Anthony, as trading analyst at Prime Codex and have been experienced in trading for about 6 years. Alright, for disclaimer, all information is being presented for educational only purpose, and information in this video should not be construed as containing investment advice or investment recommendation. Okay, first, let's talk about what is Heikin Ashi chart. So, Heikin Ashi translates to average bar in Japanese. This charting technique transforms the regular price data into a series of modified candlesticks. This modified candlestick aims to filter out noise and present a clearer picture of the underlying price trend. Now that you know what Heikin Ashi is, it's time to understand about how Heikin Ashi charts constructed. In traditional candlestick chart, each candlestick represents a fixed time interval like an hour, 4 hours, or a day. However, Heikin Ashi charts use a modified formula to calculate the open, high, low, and close price of each candlestick. The formula is as follows, where Heikin Ashi close is open plus high plus low plus close divided by 4. Next, Heikin Ashi opens formula is previous Heikin Ashi open plus previous Heikin Ashi close divided by 2. As for the Heikin Ashi high, the formula is maximum of high Heikin Ashi open and Heikin Ashi close. And for Heikin Ashi low is minimum of low Heikin Ashi open and Heikin Ashi close. So I think at this point you might be questioning about how the Heikin Ashi chart differs from the traditional candlestick pattern. So let's talk about 5 differences with this traditional Japanese candlestick pattern. The first one, to give a representation of price movement. Traditional candlestick show the actual price movement with open, high, low, and close price, while Heikin Ashi candles provide a smoother representation of trends by using modified calculation. Number 2 is trend identification. Heikin Ashi charts are better suited for identifying trends due to a reduced noise. Traditional candlestick may show more fluctuation, making it harder to discern trend. Next is reversal signal. Traditional candlestick patterns are often used to identify reversal signals such as doji, hammer, and shooting star pattern. Heikin Ashi charts may also show this pattern but with potentially different visual appearance. Number 4 is volatility. Traditional candlesticks can accurately represent market volatility with their precise open and close price. Heikin Ashi charts may smooth out some of this volatility that may give us better decision making. Last is the price action trading. Traditional candlesticks are more commonly used in price action trading strategies where traders analyze the pattern and formation of individual candlesticks. Heikin Ashi charts are often used for trend following strategies that combine with price action trading. Now let's see how the Heikin Ashi charts differs from the traditional Japanese candlestick. So let's see how they look like on the chart. As you can see, so this is the difference between traditional candlestick and Heikin Ashi. This is the traditional one, which is the Japanese candlestick, and this one is a bar candlestick, and this is Heikin Ashi. This is the traditional Japanese candlestick, which shows the actual price movement with open, high, low, and close price. As you can see, each candlestick open, high, low, and close. For example, this candle shows that the candle's opens is 1977.82 and the close is 1985.38 and the high is 1987.54 and low is 1977.40. This bullish candle. But if we try to figure out the Heikin Ashi candlestick, this is the Heikin Ashi version of candlestick. And this Heikin Ashi candles provide a smooth representation of trend by using modified calculation. To get clearer understanding about how Heikin Ashi chart are constructed, let's take a look at the chart. Now we can focus to this candlestick. For example, on this candlestick, this long wick candlestick. First, Heikin Ashi close is calculated by open plus high plus low plus close divided by 4. Where we have this candlestick and the data shows that the open is 1902.23 and high is 1903.49 and low is 1889.18 and last is the close 1897.90. And that all these values is added and divided by 4, and the result is shown in the close of Heikin Ashi. This one, it reduces the body size that we can more figure out the price action on the candlestick or pattern more better. And next, Heikin Ashi open is calculated by adding the previous Heikin Ashi open plus previous Heikin Ashi close divided by 2. For the Heikin Ashi high, the formula is maximum of high Heikin Ashi open and Heikin Ashi close. Lastly, the Heikin Ashi low is calculated by minimum of low, Heikin Ashi open, and Heikin Ashi low. Okay, I think that's it how we can calculate the Heikin Ashi chart and its difference from traditional Japanese candlestick. Let's move on to other discussion. Key characteristic of Heikin Ashi chart. First, trend smoothing. The Heikin Ashi formula inherently smooths out price fluctuation, making it easier to identify trends. This is achieved by using an average of price instead of actual price themselves. Second is reduced noise by averaging price and filtering out some price gaps. Heikin Ashi charts tend to exhibit fewer gaps and noise compared to traditional candlestick chart. And the third is color coding. Heikin Ashi candles are color coded to indicate the trend direction. Green or white candles usually represent bullish trend, while red or black candles represent bearish trends. After we know the basic of Heikin Ashi, let's move on to how to interpret this chart. Interpreting Heikin Ashi's chart, You can follow this for guidance. First is trend identification. The second is using Heikin Ashi with other indicators. The third is implementing risk management, and lastly practice and backtesting. Now let's see the practical explanation. First one is trend identification. Traders often use Heikin Ashi charts to identify trends more easily. A series of consecutive green candles. For example, this one, when it starts to show a consecutive bullish candle, the price moves into a bullish trend, while consecutive red candles indicate a strong downtrend. As we can see, this is the actual example. And the next is using Heikin Ashi with other indicators to enhance your trading decision. Consider combining Heikin Ashi charts with other technical indicators such as moving average, envelope, RSI, MACD, and trend lines. These indicators can provide confirmation of trend or potential reversal. For example, I'm going to use the envelope indicators for refinal trading. For example, at this part of chart, we can see the prices keep the bullish trends and the bearish candlestick appears. For the first one, we can detect while the price is break the envelope, and we're looking for the opposite candlestick, which is a bearish candlestick. And we can assume if we sell at its close, we can have a clear selling opportunity. For example, if we try having a reversal trading, which is bullish, we can see these examples that price starting to move down, and when the green candlestick appears, we can buy. And the next is, it's imperative to implement risk management. Always implement proper risk management techniques. Use stop loss order to limit potential losses and maintain a favorable risk to reward ratio. Lastly, practice and backtesting before trading Heikin Ashi charts live using historical data. This will help you understand how the Heikin Ashi charts behave in different market conditions. Now we will discuss the advantage and disadvantage of using Heikin Ashi charts. The advantage of Heikin Ashi charts. The first one is a smoothing price movement. Heikin Ashi charts filter out market noise by using smooth price data, making it easier to identify trends and potential turning points. Second is trends identification. Heikin Ashi charts offer clear visual representation of trends. It helps traders identify the overall direction of the market more easily due to the unique candlestick pattern. And the next is reduce false signals. The smoothing effect of Heikin Ashi chart reduces the impact of minor price fluctuation, resulting in fewer false signals compared to the traditional candlestick pattern. And number 4 is reversal pattern. Heikin Ashi charts are effective in identifying potential reversal point. Change in candle color and specific candlestick patterns can offer valuable insight to potential trend change. Next, the Heikin Ashi chart is user-friendly. Heikin Ashi charts provide a simple visual interpretation, making them accessible to both novice and experienced traders. And next is enhanced entry and exit point. The smoothed price data can provide more accurate entry and exit points, especially when used in conjunction with other technical indicators. And lastly, it helps to visualize momentum. The size and color of the Heikin Ashi candles offers a quick glimpse into the strength of price momentum. Aside from all the advantage, the Heikin Ashi chart also comes with a set of disadvantage and limitation that you need to be aware of. These are some of disadvantage. First is delayed signals. Because Heikin Ashi charts smooth out price data, they can sometimes provide delayed signals compared to traditional candlestick charts. This delay might result in missed opportunities in fast-moving markets. Second is loss of detailed information. The smoothing process can lead to a loss of detailed information about individual price movement, which might be important for certain trading strategies. Next, Heikin Ashi chart is not ideal for short-term trading. Heikin Ashi charts are better suited for identifying and trading medium to long-term trend. Short-term traders who rely on rapid price movement might find Heikin Ashi charts less effective. The next is existence of price gaps. Heikin Ashi charts may not accurately represent price gaps that occur between trading sessions of very high volatility. Beyond that, Heikin Ashi charts also have limited candlestick information. Traditional candlestick charts provide more candlestick pattern and insight into market sentiment, which can be valuable for experienced traders. And the next is limited historical analysis. Historical analysis and comparison between Heikin Ashi charts and other chart types might not always yield consistent results due to the smoothing effect. And lastly, it can give a false sense of security. While Heikin Ashi charts reduce noise, they are not infallible. Relying solely on these charts can lead to overconfidence and potential losses if the other factors are not considered. That's for today's video. Well, I think that's for the Heikin Ashi chart video. See you on the next video.